The housing market is about to implode, and some markets have had big price drops. And breaking news, mortgage demand rebounds even as interest rates hit the highest level in over a month. And to be clear, this is a macro picture. Prices have come down in many markets, which is making the market much more attractive for some buyers, even at these high interest rates. And the average contract interest rate for a 30-year fixed mortgage with conforming loan balances increased to 6.55 from 6.43. And mortgage applications to buy a home, which had gotten decimated and plummeted the week before, are up 5% for last week. And applications to refinance a home loan increased 2% last week from the previous week and were 51% lower from the same week 1 year ago. Because home prices are dropping fast. I don't want to get too into the weeds here and turn this into a 10-hour video, but I do want to address a subject that I've covered in the past because I see this threat as being a massive whopper, which could absolutely not only impact the commercial real estate market, but have a massive impact on the economy, on institutions, on pensions, on pension holders, and on the value of the dollar. Because the Fed's aggressive rate hiking policy is strangling commercial real estate. And while Big Papa Powell has told us exactly what he intends to do in terms of raising interest rates, we have to be aware that inflation, although we were told it was a little bit better than what it was expected to be, is still 5%. And that's not a decline, that's an increase of 5%. And although it may have slowed down a little bit from the breakneck pace that it was on, it's still 5%. And it's been compounding for years. It's no bueno, and everybody knows that. But the Fed has more than one tool in their toolbox. And while raising interest rates is one of them, they could also do other things like quantitative easing. They could be buying back treasuries and bonds rather than tightening so aggressively. They could be buying back treasuries like they've done in the past. And I'm not sure which is the lesser of two evils, but I do know that commercial real estate and the pension funds that have invested in them are at risk. And right now, in certain markets, and the first one that comes to mind is San Francisco, which I think is taking it the worst in the country, there's something like 30 to 40% of the space which is vacant. And that's either space for rent or space for sublease because nobody's using it and they've put it back on the market. And the subleases are still paying rent because there's a contract on it. And as those leases roll, they don't have to pay rent anymore. And they won't. And if you need space, you're absolutely going to negotiate a much lower rent, which creates a nightmare scenario for the real estate owner because they can't cover their debt service covenant ratios. And the income from the building drops dramatically. It's significantly less, which means they can't make their debt service. And they'll go a little bit deeper into that. And I don't want to lose everyone because I do want to get into the subject at hand, but this is too critical to not talk about. When the bank underwrites the loan, they figure out the interest that you're going to have to pay on the loan relative to the value of the building or the income that it's generating. But all of those ratios are upside down right now because the value of the buildings and the rent has gone down so much because there's so much vacancy. And when most of these loans were underwritten, there was something close to 5% vacancy. But today, it's something like 40 or 50%. There are no tenants. And if the owner of the building has a construction loan or something like long-term debt and they need to roll it, they need to refinance. And today, they cannot get credit because banks aren't lending. And if they do, they're going to pay a significant premium for it. They're going to pay a lot more, which means the income stream from the building no longer makes sense because the borrowing costs are higher, they're through the roof, and the revenue is significantly lower because there are no tenants and the market rate has dropped significantly. Commercial real estate is underwater, and when they default on the debt, the bank takes ownership. And the last thing that a bank wants to do is be in the real estate business. So what are they going to do? They are going to fire sale those buildings, and they will be at auction at rock bottom prices. And while I'm not Nostradamus or an analyst or an economist, I can tell you what's going to happen in lieu of that. The government is going to step in, and the federal government is going to backstop this to the tune of somewhere between $2 and $3 trillion. The government is going to create programs or print money to effectively support asset values so there isn't a crippling economic impact. And because much of this commercial real estate was securitized and traded as high yielding AAA rated bonds or other products, almost every institution and pensions that have invested significantly in these too big to fail, safest debt instruments that provided the most yield. And they are going to get eviscerated. And when you've invested 30, 40, 50 years of your life into a pension or whatever instrument it is, and you expect money from those investments, but the money's not there, and now you get 20 or 30 or 40% or less of what you thought you were getting, there's civil unrest. There are cars burning in the streets. There is hell to pay. And it's happened before. It recently happened in France. And I can tell you what's going to happen because the government, Big Papa Powell, and Sleepy Joe Biden, or whoever it is at the time, is not going to allow that to happen. And so what will likely happen is more quantitative easing, more bailouts, more money printing, and even worse, higher new taxes. And I'm certainly not sharing this to scare you. I'm sharing it to prepare you because the odds of this not happening, in my opinion, are 0%. Which takes us to the reason you probably are watching this video, which is not my market commentary, but what's happening right now in the markets that exist within Broward County. And today we're going to go into some of the biggest winners and biggest losers that exist in these cities within Broward. First up is March 2023 numbers for Southwest ranches, single family homes, closed sales. Now, it is a smaller market. You can clearly see that. There were 8 closed sales March 2022. That took a hit of 37.5%, down to 5. Median sales price uptick 6% from 1.5 to 1.59. Average sales price took it on the kisser, 2.083, dropped to 1,538, down 26.2%. That is a big whammy. Dollar volume dropped significantly, down almost 54%. Percent of original list price received, down 4.1% to 90.7. Time to contract on the uptick, 42%, 34 days. Pending sales down 17% from 6 to 5. New listings down 40%, 5 to 3. And again, this is a smaller market, but we must know what's happening in order to govern ourselves the right way and negotiate the best deals. Inventory of homes for sale upticked 50%. 15 homes are sitting on the market unsold in Southwest ranches. And obviously, this is an affluent, smaller market. And I can tell you that it's very different than many other markets that exist within South Florida, mainly because the homes have significantly much more land. Nonetheless, month supply of inventory upticked 117% to 3.9 months from 1.8. Big jump in Southwest ranches. No bueno if you're thinking about selling, and muy bueno if you're thinking about buying. But Chris, that's March data, and we're in April. In fact, we're almost at the end of April. We want to know what's happening right now. Well, good. I'm glad you asked because we're going to cover that right now. Today's stats in Southwest ranches, as far as single family homes are concerned, is a big jump. Current versus previous month to date is an uptick of 15.6% from a low in March of 1.595 to a high of 1.844. Big jump in equity if you're thinking about selling in the Southwest ranches. But if we look at the same period, current versus same month to date, 1 year ago, what you can't help but notice is a decline of 4%. From a high of 1.919 to a low of 1.844. And if we take the current versus previous year to date, the trend is no bueno. It's down almost 16%. from a high of 2.057 to a low of 1.731. And the trend is not your friend if you're thinking about selling. And I suspect the trend is no bueno as we continue into the uncertainty of what the economic changes are going to bring. Which takes us to Davie, Florida. And March 2023 numbers are out, and single family home closed sales fell off a cliff, down 41.7%. Median sales price on the downtick, down damn near 7%. 6.7% decline to be exact, from a high of 556 to a low of, let's just call it, 519. Average sales price on the uptick, up 15.2%, from a low of 485 to a high of 559. Big jump, but you can see there's a big disparity between median and average sales price. And as mentioned previously, average sales price includes all the numbers. Median sales price throws out the high and low values, gives you the middle term. Dollar volume dropped down 33%. Percent of original list price received down 6.5%. By 100.3 and hello 93.8. Median time to contract up 166.7%, 64 days from 24, a return to normal. Pending sales on the downtick, down 43.8%. New listings down 34.2%. A lot less sellers thinking about selling in March of 2023. From 38 new listings to 25. Inventory of homes for sale on the uptick, almost 5%, 42 to 44. And months supply of inventory jumped 50%, 1.2 months to 1.8. To be abundantly clear, 1.8 months is still a seller's market. But buyers have more choices and buyers have more leverage, which is why it's critical that you work with a professional that understands what the hyperlocal market conditions are in whatever market it is that you're shopping in or thinking about selling in, because the Davie macro picture is very different than the hyperlocal markets that exist within it. And that holds true of every market everywhere. And if you need help anywhere, please reach out, because we will connect you with someone we know, like, and trust, someone who absolutely knows the market cold and can advocate and negotiate for you the right way. But out with the old, in with the new. Nobody cares about what happened over 30 days ago. They want to know what's happening right now. And if we look at today's stats on the bottom of the screen, what you can see in terms of single family home sales in Davie is that the current versus previous month to date, meaning April versus March, is up 9.5%, from a low of 886 to a high of 970. And if we look at the current versus same month to date from a year ago, you can see a big jump too. Double digit appreciation, 10.4%. From 879 to 970. And if we go back in time and look at the current versus the previous year to date, what you can see is an increase of single digit appreciation, which is what I've been calling for in most markets throughout South Florida. But from a low of 821 to a high of 859, the market is on the uptick in Davie. Up until it's not, which takes us to the Deerfield Beach market. And if we were looking on a map, it would be obvious that these cities are not necessarily right next to each other. They're scattered all over Broward County. And in an effort to give you a little bit more context, that I think I may have forgotten to do this on some previous videos, this is a map, an aerial map of the cities that exist within Broward County. And Deerfield is right on the border of Palm Beach County. It is in the northeast section of Broward County, and parts of it are coastal. Unlike Davie or Southwest Ranches, which typically have a lot more land, and certainly different than Coral Springs and Coconut Creek. But Pompano Beach is coastal too, and we're going to cover all the cities that I just highlighted on the map so you've got some context. But back to Deerfield Beach. Closed sales down 24.4%. Median sales price on the uptick, up 20%. Average sales price on the downtick, down almost 14%. And I know you already know what the difference between average and median sales price is, because I just covered it, so I'm not going to do that now. But the median sales price jumped from 460 to 554, and the average sales price took a beating from 660 down to 569. Dollar volume on the downtick down 35%, and percent of original list price received consistent with every market that I've covered so far on the downtick 3.5%. Time to contract on the uptick 95%, 37 days versus 19, a return to normal and consistent with almost every market that I've covered. Pending sales up 10%. Well, that's different than many of the markets that I've covered because in many markets, pending sales are down. Not the case in Deerfield Beach, an uptick of 10% from 40 to 44. New listings down almost 12%, 38 homes versus 43. Inventory of homes for sale on the uptick, almost 80%, 79.3% to be exact. 52 homes sitting on the market unsold as of March versus 29. And the month supply of inventory went from zero point 0.8 months to 1.8. To be clear, that is a seller's market. That is a strong seller's market. Although the month supply is up 125%, and there are more homes sitting on the market unsold, which is great news if you're thinking about buying, it's still a seller's market. You've got more choices, you've got more leverage, but the lack of supply is going to dictate price every single time. But Chris, ain't nobody got time for old news. We want to know what's happening now. I understand. Me too. Today's stats, current versus previous month to date, meaning April up till the 25th versus March up till the 25th. Average sold price is on the uptick to the tune of 12.1%, from a low of 577 to a high of 646. And if we look at the current versus same month to date a year ago, whopping appreciation, up 23.2%, from 525 to 647. And if we go to the current versus previous year to date, we can see single digit appreciation that is very close to double digit appreciation, up 8.6% from 534 to 580. Up until it's not, which takes us to Coral Springs. And of course, I'm a little bit biased to Coral Springs because although I've lived in many places throughout South Florida in my 40 plus years of living in South Florida, Coral Springs is an area where I grew up. I played sports, I have tons of friends, and I do a lot of business in. I love Coral Springs. Coral Springs has changed radically from when I lived there back in the 90s. Nonetheless, closed sales down 26%. Median sales price and average sales price are both on the uptick. Median sales price up 2.8% from 625 to 642, and average sales price jumped from 655 to 677. Dollar volume is down as a function of closed sales being down, and percent of original list price received is down almost 7%, 6.6 to be exact. But gone are the days of 102.5% and hello 95.7, which to be clear is pretty close to 100. But to be clear, if you are looking to find the one buyer on planet Earth willing to pay more than anybody else, you must price your home the right way. You must create a market within a market. And if you do so, you can bet your sweet Bippy you'll get more than 95.7%. You'll get more than 100%. But it's critical that you work with a professional that understands how to do that the right way. And if you ever need help with that, you know where to find me. Median time to contract is up 211% from 17 days to 53. And although that's a big jump, it's a return to normal. Pending sales are on the downtick, down almost 40% from 85 to 53. And new listings in Coral Springs are on the uptick, up 2.6% from 76 to 78. Not a big jump in terms of actual numbers, but I suspect Coral Springs homeowners are looking to tap out of the metric shit ton of equity that they're sitting on because they know that the market giveth and the market taketh, and equity is not real until it's realized. So I suspect these Coral Springs homeowners must be watching my channel and must be making the right decisions for them, which of course is the right thing to do. Inventory of homes for sale is up 94.5%. 107 homes are sitting on the market unsold in Coral Springs, which is a massive whopping jump from the 55 a year ago. Month supply of inventory jumped to 1.9 months from 0.7. That is a big jump. And although it is still a seller's market, it's trending to neutral and then going to be buyers fast. It's up 171.4%. But given that old news is basically irrelevant, unless you're looking for an academic exercise with no economic value, we want to know what today's stats are. And what you can see is that current versus previous month to date average sold price in Coral Springs is on the downtick. It's down 2.2% from a high of 678 to a low of 663. And if we look at the current versus the same month to date a year ago, we see the similar pattern, down 2.8% from 682 to 663. But if we go back even further and look at the current versus the previous year to date, we will see that there's single digit appreciation, up 3.3% current versus previous year to date from 643 to 664. Up until it's not. And the only thing I can ever guarantee you is change, which takes us to Weston, Florida. Single family homes as of March 2023, closed sales down 25%. Median sales price, average sales price, both on the uptick. Median sales price jumped from 750 to 842, an uptick of 12.3%. Average sales price upticked 2.6% from 951 to 976. Dollar volume took a hit due to closed sales, and percent of original list price received is down almost 6%, 5.7 to be exact. Median time to contract, a return to normal, 49 days, an uptick of 158% from 19. Pending sales on the downtick by 15%. New listings, a big jump from 22 to 34, an uptick of 54%. Inventory of homes for sale up 242% from 12 to 41. There are a lot more homes sitting on the market unsold in Weston. And that's a jump in months supply from half a month to 2.6 months, up 420%. And I won't make the obvious 420 joke, but just know internally I'm laughing. And because I don't want anybody getting high on their own supply, which is a little bit funny, we're going to talk about the average sold price versus the current previous month to date. And what you can see is the average sales price is on the uptick, up almost 13%, 12.9 to be exact, from a low of 971 to a high of 1.096. And if we look at average sold price, current versus same month to date a year ago, you can see almost single digit appreciation, up 0.9% from 1.086 to 1.096. And if we look at the average sold price current versus previous year to date, an uptick of almost 4%, 3.7 to be exact, from 1.028 to 1.066. Up until it's not, which takes us to single family home sales in Coconut Creek for March of 2023. Closed sales down 8%. Median sales price, massive jump, up 20.6%. Average sales price, up 9.8. And I got news for you. The next city I'm about to cover is a whopper in terms of both average and median sales price. But of course, I saved the best for last. Dollar, depending on which part of the market you are on. Because if you're thinking about buying in that market, it's not great news. And if you're thinking about selling, it's probably phenomenal news. Nonetheless, dollar volume is on the uptick by 1%. Percent of original list price received is down almost 6%, 5.6 to be exact, from 102.5 to 96.8. Median time to contract up 45.5%. It now takes 32 days versus 22, and pending sales are down 14.3%. New listings on the downtick, down 7.1%. Inventory of homes for sale on the uptick, up 45%. 29 homes sitting on the market unsold in Coconut Creek, which represents a jump from 0.9 months to 1.4 months, which is a very strong seller's market. But the month supply of inventory has upticked 55.6%. But is that trend in March really your friend in April? Well, let's look at today's stats to see. And what you can't help but notice is that the average sold price is still on the uptick, up 1.6% from 569 to 578. If we look at the current versus same month to date a year ago, average sold price is on the uptick 6.1%. from 545 to 578. And if we look at the current versus previous year to date, average sold price jumped 5.1% from 532 to 559, up until it's not. Which takes us to the grand finale. Drum roll, please. Pompano Beach, single family homes, closed sales down 37.5%. Median sales price and average sales price are whopping gains. Average sales price up 42.5% from 677 to 965, and median sales price skyrocketing up 35% from 404 to 546. Muy bueno if you're a homeowner in Pompano Beach. Dollar volume dropped 11%. Percent of original list price received on the downtick, down 8.3%. Bye 102%, and hello 93.3. Time to contract 44 days from 32, 37.5% gain. Pending sales down 34.4%. New listings, big decline, down 27.3%. 56 new listings versus 77. And the inventory of homes for sale is skyrocketing, up almost 41% from 88 to 124, which represents 100% gain in terms of months supply, from 1.5 months to 3, trending to neutral and buyers fast. There's 124 homes sitting on the market unsold in March in Pompano Beach. But before I take you straight out of Pompton, we got to talk about today's stats, because the average sold price is getting murdered. It's down 37%. And although we saw massive appreciation in March, April is no bueno if you're thinking about selling, and muy bueno if you're thinking about buying. Because in March, the average sold price was 908, and in April, it's 572. That is a whopper. If we look at the current versus same month to date a year ago, it's still a whammy, down 23% from 744 to 572. But if we look at a more robust data set, which skews the numbers, current versus previous year to date is up 4.6% from 669 to 700. But I don't have to be a rocket scientist to understand that that 700 is not the real number, because it's now 572. No bueno for home sellers in Pompano Beach, and muy bueno if you're thinking about buying. Now, I hope you found this content valuable, and if you did, please subscribe to the channel, give it a thumbs up, share it with a friend. Be on the lookout, because I am committed to sharing the housing market data that exists within every metro in the state of Florida in order to empower you to make the best decisions for yourself, for your family, and for your financial bottom line. Now, please check out my next video, because I suspect you will love it a lot. And until next time, peace.